Welcome to Part 8 of our Rent-to-Own investment series. In this segment, we cover the pros of rent-to-own investing when compared against the traditional plain vanilla buy and hold strategy. Let's take a look and see where rent-to-own really shines. Pro number 1, extra cash flow. One of the main advantages to rent-to-own investing is the additional monthly cash flow. As tenant buyers make a higher payment to accumulate the down payment they require through monthly option credits, the investor enjoys additional monthly cash flow. For anyone who likes to see regular returns or wants to build a stream of passive income, rent-to-own is a fantastic strategy. Pro number 2, deposit from the tenant. The next key advantage of rent-to-own is that the tenant buyer provides an option deposit. The initial deposit is typically in the range of 4 to 10%, although sometimes higher and sometimes lower. For the investor, this deposit reduces the initial investment in the deal and provides them with extra security. The most important thing about that deposit is that it ensures the tenant buyer has some skin in the game and strengthens their incentive to stick with the program to the end. Pro number 3, low maintenance. Another benefit of rent-to-own investing is that there is less maintenance required. Because the tenant buyer has given an option deposit and intends to own the home, they will generally treat it with a higher degree of care. Furthermore, in a rent-to-own transaction, the tenant buyer takes responsibility for all maintenance and repairs. We even make sure that the tenant buyer attends the home inspection so they know exactly what condition the property is in before they purchase. Pro number 4, rent-to-own is more passive. If you're looking for a more passive way to invest in real estate, then rent-to-own should have your attention. While there is more work involved in finding the right tenant buyer and getting the deal set up, once you close on the property, rent-to-own is a far more passive way to invest in real estate. Tenant buyers are easier to deal with than regular tenants. They want to pay on time so that they can earn their monthly option credits, and they won't call about things like clogged toilets or leaky taps, since they are responsible for maintenance. Another nice benefit is that tenant buyers have an increasing incentive to complete their term as they accumulate option credits throughout the deal. This means that turnover is low. Pro number 5, predetermined exit strategy. The next benefit of investing in rent-to-own can be a pro or a con depending on how you look at it. Many investors like the idea of having a predetermined exit strategy for their investment, but this means the strategy is set from the get-go. With rent-to-own, the term is fixed up front, and in the majority of cases, the tenant buyer will take title at the end of the term. Sometimes deals go sideways, but at least there is the initial option deposit and the accumulated option credits to compensate for the trouble of having to find another tenant buyer, re-rent, or sell. Pro number 6, you get to help real people. The final benefit of rent-to-own investing is not financial, but it is one of the best. By investing in rent-to-own, you'll help real people and families have a place to call their own. Oftentimes, the investor will be providing a second chance for these people to achieve home ownership. More importantly, you'll be giving someone a hand up as they work their way towards building wealth as a homeowner. Being able to help people while earning great returns is one of the best aspects of rent-to-own. While rent-to-own investing is a powerful strategy with some amazing benefits, no strategy is perfect. In the next session, we'll take a look at some of the downfalls of rent-to-own investing.